Moving on to healthy fear in the investing piece. I am guilty of encouraging people to jump into investing with both feet because I'm aware that many people hold back from doing so out of fear, but that fear of broad-based index fund investing is probably irrational and just based in a lack of knowledge or awareness. But I think a rational level of fear in investing decisions is actually quite beneficial. Look no further than the slow unraveling of cryptocurrency this year for proof. And I promise I don't mean to turn this into a dunk contest, but it is a useful personal example, so we're going to go there. In 2020 and 2021, when crypto heads everywhere were echoing choruses of "to the moon" and "have fun staying poor," I felt very fearful and skeptical because my personal investing philosophy is not to invest in things if I don't understand how they make money. In other words, if there are no underlying cash flows that I can point to, it is too speculative for my risk tolerance. For example, with an index fund comprising a bunch of company stocks, I understand why those shares have value. I can see the underlying fundamentals of the companies, that they are profitable or that they are going to be profitable or that they are underpriced. It intuitively makes sense to me why investing in a wide range of diverse companies over time will provide returns. Same with something like real estate. I understand the math of how you can calculate why putting $50,000 down on a certain property that will yield a certain amount per month, as well as the depreciation write-offs and the appreciation of the property and the diversification of your investment income makes sense. I understand where the return is coming from. I just never felt that way about cryptocurrency or NFTs. And I'm not claiming that I was right or wrong about it, just that the speculative nature of these assets and the supposed reasons they had or have value did not pass the sniff test of my own investing philosophy. I was fearful. I felt afraid to lose money on something like Bitcoin, which, while I could see the technology as impressive, didn't seem to have inherent value to me. There are no underlying cash flows or profits, and the value is simply contingent upon someone else being willing to pay more for it later and the mass adoption of the idea. The arguments for why they had value in that particular example, like the limited supply, also didn't make intuitive sense to me. We have had a hard money system in the US before, so think money backed by gold or silver, and we abandoned it because it was not flexible enough. Hard money systems typically lead to greater wealth inequality, not less. And the point is, I didn't feel at all confident in the facts that I was presented with. I had fear. I did not invest. Now, we've seen this crypto market unravel a little bit. Supposed stable coins like Luna going to zero, firms like Celsius pausing withdrawals, Coinbase admitting that if they go bankrupt, they can take your crypto, and the value of speculative assets like an NFT of Jack Dorsey's first tweet, originally purchased for almost $3 million last year, only being able to fetch an auction price of $280. Now, this isn't to say that there isn't long-term viability in these things. I am not claiming that it'll never work or that these markets won't come back. I am merely saying that my own risk aversion and fear prevented me from falling prey to FOMO. My fear of losing money was greater than my fear of missing out. And now I have the distinct privilege of being only down 12% year to date instead of 50% or more. A healthy fear of losing money may prevent you from striking it mega rich, but it'll also probably prevent you from ever losing your shirt. The boring, diversified, broad-based index funds that stand the test of time are not likely to make you a billionaire, but they are almost guaranteed to make you a multimillionaire if you invest for long enough. The TLDR is that if it sounds too good to be true, it probably is, and exercising fear and caution can save your ass when it comes to investing your scarce, finite resources.